could have been worse. That's my gut reaction when I think about today's shellacking. Two very high-profile stocks, Johnson & Johnson and Boeing, played right into the hands of the bad news bears, and their weakness crushed the Dow Jones average. And you know what? The action made sense. The action made sense because the news was very, very bad. We found out that a top executive at Boeing allegedly knew the 737 MAX was unsafe and lied about it to the FAA. It sounds criminal to me. As for J&J, it called a big lot of talcum powder because of the possibility of asbestos contamination, just a little bit. But hey, wait a second. I don't know what to say here because the company's not saying much. What I do know is that management gave us multiple assurances that this kind of thing couldn't happen. And that's why the stock was punished so severely. Frankly, I was stunned. I am stunned. I thought it would be down $10 in the news when it came out right before Squawk on the Street. Well, it closed at $8.47. Better than expected. Alas, we own J&J for my charitable trust. The stock had just gotten out of a terrible funk thanks to a fantastic quarter. Possibility of an opiate settlement that doesn't look so good now. There's a chance that the batch of talc may have been contaminated by another source, maybe not J&J. And frankly, that possibility is the only reason I'm not telling you to dump the stock right now, right here. At this point, the bears are simply going to say that Johnson & Johnson is not a drug company, it's a law firm. And a losing law firm at that, because it's involved in so many lawsuits, just $15,000 alone in talc. Many people are going to say guilty as charged. Is there a level where J&J becomes safe to buy after that excellent quarter, great balance sheet, AAA? No, not until we hear from Reuters and the New York Times, both of which wrote highly critical pieces about how the company handled these issues in the past. Stock was in the 140s when they wrote them. Now it's fallen back to where they fell to before. I bet you Reuters and the Times savage J&J. These two stocks cast a pall over today's trading, and for good reason. Both stocks are vicious conundrums. We know that one day Boeing will get that disreputable plane in the air again, and it'll be safe as can be. But their credibility has been trashed. So I suspect Wall Street won't pay as much for the stock, even once the situation is fixed. J&J, I have praised this stock too endlessly. I've backed management endlessly to the hilt through the myriad lawsuits. This new wrinkle, though, I'm saying maybe it is just too much for me. I'm going to talk about my wife when I get home. Unless the asbestos has been improperly placed into the talc and it's a totally isolated incident. Maybe the evidence is wrong, but, boy, that seems like a thin read. I've often thought that J&J is the best company in America. That's why we own it for the charitable trust. Join it, actionalertsplus.com club. You can hear how upset I am. I mean, I'm discouraged. Now, I would love to see CEO Alex Gorsky, whom I think is fantastic. He's done such a good job managing the drug and device side of the equation. I'd like to see him come on Mad Money and explain to us all the possible ways this asbestos taint could have happened, despite his assurances to the contrary. It's very suboptimal, and it's very dispiriting. Now, look, I'm a human being. I feel awful that I said all these good things. But let's get on to something that I can fathom a little better. Let's talk about FANG. Remember, that's my extended acronym for Facebook, Apple, Amazon, Netflix, and Google, which is now Alphabet. Now, lately, I've been noodling on its composition, frankly. Now, the Facebook remains a very undervalued stock. I was pleased to read Mark Zuckerberg's Georgetown address, where he talked about freedom of speech here versus China. I thought he acquitted himself well, especially when he talked about the censorship rules on TikTok that were apparently written by the Chinese Communist Party. Thanks. Good to know. The only way this name gets lifted out of FAANG would be if Mark Benioff, the CEO of Salesforce, gets his way that he talked about this week, and Facebook's broken up into three separate companies, Facebook, Instagram, and WhatsApp. That still seems pretty unlikely to me. Apple is the market's North Star. Managed to rally today, and I think this moves about more than just a trade deal in China. Apple's going strong because of the incredible worldwide popularity of the new iPhone 11. As a satisfied customer, I can tell you that the 3-camera aperture, I think that's the word, it is wonderful. I took pictures of my wife in the middle of the night in dark, and I was going to post them on Twitter, which is, hey, Jim, I'm in my pajamas. But they came out perfect. For the last 200 points, I've been telling you to own Apple, don't trade it. Why stop now? Good graphic. Good graphic. Heather Gaines special. I thought that Heather Gaines was really much more focused on Zscaler and CrowdStrike, but this is remarkable. Amazon reports next week, and I'm concerned about its spending habits. Or rather, I'm concerned that Wall Street will be concerned about its spending habits because Amazon's spending in spades because it likes to grow. But it does need to control its expenditures at some point or its stock could get hammered. That said, you know what the real threat to Amazon is? Senator Elizabeth Warren, the frontrunner for the Democratic nomination, who's adamant that Amazon needs to be broken up. She wants to separate Amazon Web Services from Amazon. That would be disastrous for shareholders. Then there's Google, which has been Alphabet for years, so we really have to change the acronym. Alphabet has the same Elizabeth Warren woes, but it's so cheap that I think the stock would actually benefit from a sum of the parts breakup into search, cloud services, Waymo, and the self-driving car initiative, which brings me to the elephant in the room. Brings me to Netflix. Yeah, Netflix. Stock got hammered today, just as I told you it would be last night. Remember? I said I didn't like that quarter at all and that people were wrong to buy it. They were wrong. When Netflix reported 2 nights ago, they missed on almost every key metric. I think it's got more downside. I think the stock has lost its mojo. I say we replace Netflix with a far less episodic Microsoft. But if we do that, well, you know, we've got some difficult choices to make. So my suggestion is this. I need a new acronym. Give me your suggestions by going onto Twitter and typing in @JimCramer and give me your new acronym. All that said, I think today could have been worse. The market needed to take a breather, and a lot of this weakness came down to issues that are very company-specific. There's nothing to extrapolate from Boeing or J&J other than sadness and confusion. One scattered piece of good news, I like the way Coca-Cola held up during an awful day. Stellar quarter. Congratulations to James Quincy. Hey, and a Topo Chico on me. On the other hand, I hated the action in the retail ETFs, which had the worst day in a couple of weeks, led lower by Macy's, which got clubbed by an extremely bearish analyst report. While the analyst didn't come out and say it, the research made it feel like the dividend, which yields a gigantic 10%, isn't as safe as the marathon man visiting the dentist. The bottom line, it was bad day. But we have to hope that Larry Kudlow, President's chief economic advisor, was right yesterday when he told me that we're going to get some trade relief real soon. High-level officials talking it out about China. But without some movement from China, you can expect more miserable sessions like this one, including still lower prices for Johnson & Johnson, Boeing, both deserve it, and yes, FAANG reject, Netflix. You stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.